All right, what is up, traders? What's up, tycoons? Super excited for today's video. Got another natural gas video for you today. So the EIA just put out their weekly natural gas summary. We're going to break down some of the highlights of that in today's video. We're also going to cover many different charts. Okay, we're going to take a look at the weekly time frame for the natural gas futures. We're also going to take a look at the MCX futures, all right, and look at the monthly supply and demand zones. These are very important for understanding the bigger picture. We'll zoom down into the 4-hour time frame. We are getting the pullback that we were expecting. We're going to go over why we were expecting that pullback and how it doesn't necessarily have to mean that the rally is over, and how we're still looking for a wave 5 higher and we're in the wave 4 process. We'll zoom in a little bit so you guys can see more clearly some of the signals that we were talking about in the last video. We're also going to break down UNG. All right, currently it's holding the 200-day moving average for 3 days in a row on the daily time frame. That's also nice to see. Recording this, right before market open, so we'll have to see how things progress throughout the day. And then this is the Boyle daily chart here as well. In the early stages of possibly showing a reversal, we're going to talk about some of the targets if Boyle does get a reversal and natural gas can continue to push higher. We'll break all of that down in today's video. So be sure to smash the like button and subscribe to the channel for more. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer. If you're new to the channel, I do want to mention I started a completely free newsletter for you guys. It's called Investment Intelligence, giving out free, valuable finance content every single week. And I also try to sprinkle in some trade ideas. This was one on Tesla, highlighting all of the conditions that we're looking at on the chart for the setup. And you can see how that trade turned out very nicely over here. Not all trade ideas are long ideas. Some of them are even shorter ideas. This was one here on SWK, Stanley Black & Decker, highlighting the rising wedge, going over some of the targets to the downside. And you can see how it played out and came to those targets very nicely. So if you're fans of free, valuable content and free trade ideas, you'll really enjoy the newsletter. There's a link in the description where you can sign up for that. Now, let's get into the video. When we take a look at U.S. natural gas consumption, what we can see is that U.S. consumption this week is higher than last week and also higher than last year. We see Mexico exports are down on the week, but they're also up compared to last year. We see pipeline is basically consistent with last week, also slightly higher than last year. LNG pipeline receipts, all right, we can see that that has been on a steady uptrend, both this week compared to last week and also last year. And total demand as a whole is up week over week and also year over year. So good stuff to see there. We're liking that so far right now. We're going to see if that can continue. This is a little bit more of a bullish thesis, right? If more people are consuming natural gas in the US, that's something that we're going to want to see if you're a bull. Now, when you look at the working natural gas and underground storage, it is rising towards, the 5-year maximum. And so we are heading, in an upwards direction here on heading closer to the maximum here rather than being back at the minimum. LNG, when you look at the pipeline receipts, average natural gas deliveries to U.S. LNG export terminals increased by 2% week over week. Deliveries to terminals in South Louisiana increased by 4.9%. Deliveries to terminals in South Texas decreased by 4.4%. And deliveries to terminals outside the Gulf Coast were essentially unchanged. And 20 LNG vessels with a combined LNG carrying capacity of 73 billion cubic feet departed the U.S. between October 5th and October 11th. So that's, about basically some of the LNG info right there. LNG is a big thing in America now. The landscape for LNG has changed drastically, and the U.S. has become a global powerhouse when it comes to LNG and exporting liquefied natural gas. Now, here we have our charts. Okay, we'll go ahead and break down the charts. And this is the scenario that we've been looking at, especially when it comes to, a little bit more of the larger time frame, right? We had two possible scenarios, and we basically just had to be patient, right? I was talking about being patient. The bullish count, which is the one that I favored, is the one we see here, where we had an ABC down. If you don't know and don't understand, markets tend to move in 3-wave or 5-wave structures, right? A 3-wave is going to be a corrective wave, and a 5-wave is going to be an impulsive wave. So basically an ABC is just a correction. And if we're getting an ABC down, then ultimately, you would be looking for a move to the upside, right? So that was the bullish count, and that appears what we're getting right now. The bearish count was basically that this was a 1, 2, 3, and this ABCDE right here was going to be your wave 4, okay? And wave 5 was going to come down here and take the natural gas futures down to $1.08. Now, I didn't really see that happening, but you do want to plan and prepare for both scenarios. But in this case, we are getting the bullish breakout here. It is largely due to the whole Iran and Palestine situation. So my thoughts and prayers go out to them. But we're just going to leave that how it is. War oftentimes has big impacts on energy prices, and especially things like natural gas. And price action often precedes news many times. And so we're just really accumulating through this period here, ultimately waiting for the next global catalyst is what it seems like. And we have gotten that now. Now, a couple of the signs that made me favor the bullishness was we got a weekly MACD crossover here, okay, at this point. And since this point, it's been in a strong uptrend, continuing to make higher lows, right? Continuing to make higher lows. Now, remember, this is the natural gas futures. If you're trading something like Boyle and you've been in Boyle since the beginning of the year, that's not how your chart looks, right? It doesn't look like it's continuing to make higher lows. And there's many factors that are present in, causing this. I have a really good video describing all of these in great detail. You can look it up. It's just called ZachlyTrades. You just type in ZachlyTrades. Decay, Boyle, UNG, both of those suffer from multiple factors of decay. And you do want to be aware of those risks if you're trying to trade things like UNG and Boyle. The other factor besides this weekly MACD crossover was we had one of my favorite patterns here. Okay, and what it is actually an inverse bump and run. So what we have is your prevailing downtrend here on the RSI. Okay, and then what do? We end up getting this bump down in price afterwards, right? So the bump is going to be essentially this trend line right here. Okay, and once we got this trend line here, that was our bump. So this is what an inverse bump and run looks like, right? You have your prevailing downtrend, and then you get an aggressive bump down in price. And we broke that first trend line here, and this was a very good sign. And what we needed to see was continuation to the upside and break of the second trend line. And you can see once we broke that second trend line, that also coincides with us breaking out of this triangle pattern here. There was a few signs, and you really just had to be patient in this market and wait, right? And cash is always a position. Don't forget about that. You don't have to force yourself into a trade or rush into a trade just because you see thing in time frames is very relevant, right? So when we're looking at higher time frames, like we're starting off here with the weekly time frame, you're not going to be trading this in, looking for the move the next week, right? You're looking for the moves to develop in the future. And it's going to take some time to play out. Now, I think, and where I've been mentioning where I think natural gas can go is going to be back up here to this $3.50 to $4 region, right? We've tested it multiple times in the past, and we have yet to test it as resistance, okay? Old support becomes new resistance. That's a very common concept to think about. And so, as you can see here, we haven't really seen that yet, okay? We just blew through it when we tried to test it as support again. And it also coincides with that 200 moving average here. Okay, so this is your 200 weekly moving average right in the middle of that zone between $3.50 and $4. We really want to see us hold above $3 here, right? So we are getting a little bit of a pullback, and it would make a lot of sense for us to get something like this. Okay, so if we were to do something like this where we break up, pull back, bounce off of this trend line, and then continue higher, that makes a lot of sense, right? And that's kind of what the drawing is there to symbolize, a breakout, retest, and then push higher. So we'll see, how things are going to hold up. All right. When it comes to your RSI, we'd prefer to bounce off of this trend line and move sideways or move in an upwards direction. Staying above that trend line is going to be a bullish signal there. When we come over here and look at our monthly supply and demand zones, so we can understand, again, just some of the big concepts here, lots of support here, lots of demand, lots of demand, lots of demand. We tested again, demand, tested over here, demand. And each time we tested this in 2023, we saw lots of demand. Buyers just came in and quickly ate it up with demand and pushed price higher. But we really consolidated. Look, this is the beginning of 2023. We really consolidated in that overhead supply zone, and we're not able to break through that overhead supply zone for the entire year of 2023. Now we're finally getting some breakout here. And when we initially broke out and we were at this area here, I mentioned that this is no man's land. So in between these major zones, this is what's called no man's land. And the reason it's called no man's land is because this is not your point of entry. You want to enter in major areas of liquidity in major zones where of supply or demand, right? And these are the areas you want to look for. And so when we're breaking out here, you don't know for sure. You have the risk to reward ratio is not in your favor, right? We may continue pushing to the upside, or we may pull back for a retest, and it's not as clear, right? So now we are starting to head closer to that retest of this prior supply zone, and we want to see if we can flip it to demand. That'll be a key sign for a push higher to the upside. If we take a look at our monthly MACD here, it's also very close to curling over. Okay, look what happened here when we curled over to the downside and we got a bearish curl over. We see a huge move to the downside. The last bullish crossover we had was over here, and look, huge move to the upside. So if we can get a bullish crossover and get our MACD above that 0 on the monthly time frame here, that's also going to be another indication of some bullish momentum, and we'll see how that will affect prices. When we zoom into the 4-hour chart, we're looking for a 5-wave structure to the upside right now. So we have essentially wave 1, 2, 3, 4, 5, right? And we talked about up here how we were getting a lot of the warning signs that we saw in the past. We saw the warning signs over here. We saw the warning signs over here. And I can break down those warning signs for you real quick before we zoom in. But it's essentially when you're overbought and then followed by a MACD crossover to the downside, you usually see a significant pullback, right? Overbought, MACD crossover to the downside, significant pullback. And I talked about how initially we had this bearish divergence. We wanted us to break out of this. And this is right here where we broke out, right? So we broke out of that bearish divergence at this moment, continued to push up higher. Just because you're overbought doesn't mean price has to go lower. And that's basically the concept that I was explaining, and how we were actually looking for price to continue going higher if we could get back into that overbought territory over here. And it did, right? But now in the last video, I said, hey, we're back in this overbought section. We've been overbought for, basically all of October now. And if we get the MACD crossover, which you can see we ended up getting, it was a sign that we were going to get a pullback. Now we'll zoom in so you can see these things a little bit clearer. I'll break that down. But right now, we're essentially looking for a pullback. We talked about possible retest of the megaphone pattern. We had this bullish megaphone pattern that we kept testing, and we were looking for the test to the upside, and we actually extended out of that and pushed above that. So, things may have gotten a little bit too frothy at this point, and it may need to come back down into this zone. But remember, when we looked at that monthly time frame, we talked about how this is no man's land, right? We're not looking to enter here anyways. We're looking to get a retest of the supply zone and look to switch this to actually demand. Okay, and we want to see demand step in and actually push us higher into the next overhead supply zone here. When we zoom in a little bit, we can take a look at the levels a little bit more and, talk about the signs that we saw. So, again, we had the MACD crossover after being overbought, and look at what we did. We came down, and that initial bearish divergence that we had, we actually flipped that to resistance here and pushed down lower. So now it's just a matter of, are bulls going to step in and try to defend this trend line here, or are we going to get that retest of the supply zone? Now, the natural gas futures can pull back anywhere from 5 to 18%. And the reason I say that is because there's this big gap all the way down here. Okay, you see this really big gap down here. What's interesting about the gap is that it aligns with the 61.8% and 76.4% retracements, which basically those are like the last line in the sand if you're bullish. Okay. So if you're bullish and you're expecting price to continue an uptrend, this is going to be the major area where bulls have to step in, right? Ultimately, you'll see that if they flip that to resistance from support, that's going to be bearish. Now, look at how well that aligns with everything. Okay, that's also the bottom of the prior supply zone, right? And so if we're looking to flip this to demand, right, it also, everything just lines up, right? So we're seeing a lot of confluence right now in the analysis, okay? Whether it be the Fibonacci retracements, whether it be a potential gap fill, and whether or not it's the monthly supply and demand zones, a lot of things are aligning together. Now, I'm not saying that we're going to get a full, 16, 17, 18% pullback, right? And that's not necessarily what I'm looking for. I'm just saying in in a scenario where that does happen, it's still not even over for the bulls. Right now, more realistically, we're looking for buyers to step in around the 38.2 or 50% retracement. Now on the MCX futures, that's going to be around 255 and 245, and 239.9 is your original 1.0 extension. And so oftentimes you would look for a retest of the 1.0 extension, as a wave four, as a potential wave four. Okay, so those are some of the key areas that I'm looking at on the smaller time frames. If you're enjoying the analysis so far, there's a link in the description for Ko-Fi. Ko-Fi is a platform that I'm using now, and this is where I'm booking all of the 30-minute and 1-hour sessions. So I do one-on-one sessions every single week. Again, those are available in 30-minute and 1-hour sessions, and you can now directly book through Ko-Fi. And it's just an easier platform for me to keep things nice, neat, and concise, and make things a little bit better. Okay, now this is UNG, the daily chart. All right, the blue line, 200-day moving average. As I mentioned, we held above it for 3 days. That's a nice sign. We're still holding above that 777 at the moment. Pre-market, you can see it was dipping down below. Again, we talked about the futures pulling back, so it makes sense we're getting a pullback here in some of these different areas. Let me get this box off the chart for you guys. And at the moment, again, we're getting this healthy pullback, right? I mean, you can see the daily chart was very overbought. All right, we came to these overbought conditions. We're starting to get a pullback now that's healthy, and we're very far away from a MACD crossover to the downside, right? The white line has still got plenty of room in between the red line here. Okay, so it's not the end of the world. On this pullback, we're going to look at 731 and 715 as some major support levels. If we do happen to break below there, we'd basically come back within this range right here of 667 and 642. Those are going to be your major support levels. But to the upside, if we bounce around 731 and 715 and we break above our most recent highs, 821, 852, and 904 are going to be the major resistance levels to the upside and some of the bullish price targets if we can, continue the momentum. Keep in mind your 200-day moving average is going to be very important. So, on this pullback that we're getting, if we, retest the 200-day moving average and reject it and head lower, that's going to be a little bit more of a bearish signal, and that's going to be something you want to pay attention to. Okay, the 200 moving average is pretty important to a lot of institutional traders. There's a lot of institutions that simply go long or short based on something being above or below the 200-day moving average. And if natural gas can start to, maintain in some of these different ETFs and some, different things like that, instruments of trading natural gas, if they can get above that 200-day moving average, that's going to be pretty important. Now, for the natural gas futures, $3 is that really big price level. Okay, I think that as long as we stay above $3, there's new bulls that are entering the market, right? And there's new participants that are looking to play natural gas to the long side. And if we lose that $3 level and we start trading below there, then I don't think the bullish scenarios are as relevant, right? And I think that it's going to lose a lot of participants. So ultimately, we want to see natural gas stay above $3. If it does dip below there, then if it does fall below there, then sit on the sidelines, right? Or maybe trade it short. Okay, there's nothing wrong. Again, I mentioned cash is a position, and if we dip below $3, then you can look to potentially go long if we can break out back above it. Okay, and you don't have to force anything. Okay, in a lot of these sessions, I've dealt with many people on Boyle, and they fall in love with their trade, they fall in love with their idea, and it's mostly an idea. They don't even really have a plan, right? And so you want to have a plan, you want to execute that plan, and you want to be emotionless, right? You don't want to be falling in love with your trade, falling in love with the idea of your trade. You just want to simply execute and have your plan, follow that plan, and achieve your goal, right? And oftentimes achieving your goal can also mean taking a loss, right? And what that means is you took a responsible loss, a managed loss, you understood your risk, and you followed your risk plan accordingly, and you went ahead and took that loss rather than sitting on a massive 60, 70, 80, 90% loss, like some people have done. Now, I say all of that because we're about to look at Boyle, okay? And this is one where lots of people made a lot of money and a lot of people lost a lot of money, okay? I've talked to people down, 5, 6, 7 figures on something like Boyle, okay? And, so keep that in mind, okay? These things can be very dangerous if you don't understand, what you're doing. But there's 3 stages to a reversal, right? And so we're going to keep things fairly simple here with Boyle. You have your downtrend, right? And then you have what's known as box consolidation, right? And take a look. We have this overhead supply zone here. We have this demand zone down here. This is our box consolidation, guys. We're just literally consolidating in this period here for Boyle, right? And this is what I meant by, if you take a look at the Boyle chart versus the natural gas futures chart, where the natural gas futures were making that consistent uptrend of higher lows and putting in that basically ascending triangle pattern. Boyle has not necessarily been doing the same, right? And it's really been stuck consolidating. Now, being that there's 3 stages to a reversal, we talked about the downtrend, we talked about our consolidation period, and this is going to be a potential scenario, right? Now, this is not exactly how it's going to play out. This arrow is just here as a guideline for the 3 stages of a reversal, right? Now, this blue box is a huge gap up here that Boyle has to fill, and if we were to get the third stage of this reversal, it's very possible that Boyle can come back up to this $130 to $140 region to fill this giant massive gap. But there's a lot of work that needs to be done for that to happen. Okay, and we're going to need to see that natural gas futures chart really break out to the upside. Okay, get the retest, hit the wave 5 targets, and continue some bullishness to the upside. Right, so there's a lot of work that needs to be done for that scenario to happen. So I don't want you guys to watch this video, buy Boyle here at $70, $67, thinking that it's going to go to 140 in a very short period of time. That's definitely not what I'm telling you guys to do. All right, we also have the 200-day moving average well below there. That's going to be a major resistance level. But essentially what we would look for this scenario is we would look to break, essentially we kind of have a triple top here, or a quad top, however you want to call it, right? We tested the level over here, we tested the level here, we tested the level here, we tested it here, and we tested it here. Okay, the more times you test these levels, the weaker they get. So if we can break out, we'd look for a retest of this level and then a push higher to the upside for that third stage of the reversal, right? And so we did a lot today. We kind of went over some of the smaller time frames. We went over some macro charts. We talked about a lot in today's video. Hopefully you guys enjoyed it and learned something new. If you did, smash that like button, subscribe to the channel. Don't forget to sign up for the newsletter using the link in the description. And again, if you want to book a one-on-one session with me, you can do that through the Ko-Fi platform using the link in the description. I do 30-minute and 1-hour sessions, and we can work on scheduling a time together.